Welcome, ladies and gentlemen, to Lesson 7, Budgeting, Planning, and Control. In this lesson, we're going to understand the role of management and others within an organization in preparing a budget. We're going to understand the components of a master budget. That includes the financial budget and the operating budget. We're also going to prepare from the budgeted information, budgeted income statement and budgeted balance sheet, and we're going to reconcile the operating cash or our cash balance based on the budgeted information. Now, please all have Lesson 7 cheat sheet in front of you. Have your concepts and definition side in front of you, and we're going to start over here on the right with this flow charts, budgeting in the planning and control cycles. So as you recall, in Lesson 1, we had this same flow chart, and we're talking about the role of management, planning, which is setting short and long-term goals and strategies, and it usually takes the form of the budget, right? Well, now in this lesson, we're going to prepare a budget, and it's probably the boringest thing in the world, but you need to understand how to do it. I've never prepared a budget. The first time I prepared a budget was when I was in college, and my dad said, "Well, if you want me to give you money, you're going to have to prepare a budget." And I said, I don't want to prepare a budget, like a personal budget. So I'd never done it. I didn't even do it then. I just pretended like I did. But anyway, I guess I was fortunate enough to be funded for part of my education. But anyway, here we're going to actually prepare a budget. It's going to be pretty boring, pretty tedious. It's going to be HMS round belly. It's going to take us through the budgeting process. But it's going to be important to know, and really, I'm not, we're going to have given information in the basic concept is to understand how this flows. Alright, and so if you go down below this flow chart, you'll see some definitions. Master budget is a comprehensive set of budgets that covers all phases of an organization's planned activities for a specific period. Now, operating budgets ordinarily cover a 1-year period, which corresponds to a company's fiscal year, and financial budgets ordinarily cover the financial resources needed to support the operations, including cash, receipts, disbursements, inventory, capital expenditures, and financing. Now, so the master budget, we have how the master budget flows underneath those definitions. So we got the operating budgets on the left, the financial budgets on the right. We got sales budget, production budget. Under the production budget, we got raw materials purchase budget, direct labor budget, manufacturing overhead budget. Below those is the budget cost of goods sold. Below that is the selling and administrative cost budget. Those are the operating budgets. That goes into the budgeted income statement. Over here we got the financial budget, we got cash budget, inventory budget, capital purchases budget, and financing budget. Those flow into the budgeted balance sheet. Now let's get some definitions on what exactly all these budgets are. Alright, so top left, budget. A budget is a detailed quantitative plan for acquiring and using financial and other resources over a future time. Remember, managerial account is future. Future, that's what we're focused on, versus financial is historical. Managerial is future. Budgeting, the act of preparing a budget. The boring part. Budgetary control, right? That gets into the control process. The use of budgets to control an organization, and we control an organization by comparing our actual results against the budgeted results, and that's why we need to have budgets, or management needs to have budgets, is they need to see how the organization is doing. They need to compare the actual results against their plan, the budget. Alright, over here, zero-based budget. Zero-based budget is a method of budgeting that requires managers to justify all budgeted expenditures, not just changes in the budget from prior year. Alright, not very popular because you have to go through the whole budget line item by line item instead of just applying additional amounts from prior year. Not very much used in practice because it's very cumbersome, but understand the definition. Alright, getting into our operating budget, the sales budget. It's an estimate of the number of units to be sold and the total sales revenue to be generated. Production budget, an estimate of how many units need to be produced during a period. Inventory budget, an estimate of planned raw materials, work in process, and finished goods, and the beginning and finished goods at the beginning and end of the period. Raw materials purchases, the amount of raw materials needed to meet production goals and planned ending balance. Direct labor budget, the amount of direct labor needed to meet production goals. Manufacturing overhead budget, the amount of manufacturing overhead needed to meet production goals. Budget of cost of goods sold, the estimated cost of goods to be sold to meet sales goals. Selling and administrative cost budget, the amount of selling and administrative costs needed to meet sales goals. And cash budget details the estimated cash receipts and disbursements for a given period. Alright, those are all the definitions. Now let's go through and create all those. Sounds exciting, I know, but let's do it. 1. HMS Roundbelly Inc.'s marketing department has developed the following budgeted sales information for the forthcoming year by quarter. Alright, like I said, all the information is going to be given, but I want you to follow along and understand how all this flows together, and so that when you're at home doing a homework problem, or at school doing your exam, you're going to understand how all this works together so you can calculate your own budget. All right, so one, budgeted boat sales. We've got 24,000 boat sales. That's what, and this is for HMS Round Belly's 14-foot aluminum boats. So this is for a segment. It's a operating budget for a segment, and it's the 14-foot aluminum boats segment. So we got budgeted boat sales of 24,000 in quarter one, quarter two, 41,250. Quarter three, 12,600. Quarter four, 23,800. Total annual budgeted boat sales are 101,650. Now the sales price per boat is $365. So all this information is given. But how do we come up with budgeted sales revenue by quarter? We take budgeted boat sales times budgeted boat sales price. All right, and so that by quarter, and we get our annual sales. All right. The next step, now remember over here on our master budget, we start our operating budgets with our sales budget, and that leads into the production budget. Now let's go to the production budget. 2. HMS Round Belly Inc.'s production department has developed the following production budget using the marketing department's sales budget information. No, the production department requires to maintain ending inventory equal to 8% of the next quarter's budgeted units. Budgeted sales units for Q1 following this budget year is 26,000. Okay, now, as you see in 2, it says the production department is using the marketing department's budget. Like I said, this is everyone in the organization needs to participate in this budgeting process. First, the marketing department says, how many boats can we sell? Okay, we can sell this many boats. Now, from there, production says, okay, well, if you can sell that many, we need to make this many. That's where we're getting into the production budget. So the production budget needs to follow the sales budget. That's why over here, the sales budget comes first. Now we're going to get the production budget. And we're going to say the budgeted unit sales, that comes from our marketing department, right? And then our budgeted ending inventory, we need to maintain on hand in finished goods a certain percent of the next quarter's sales. So that way, at the very beginning of the quarter, we have something to sell. That we don't want to fall behind. We don't want to have back orders. So we need to maintain a certain percentage on hand. And this is pretty typical for any problem. So we need to maintain a percentage of on hand inventory, and that's 8%. So our budgeted ending inventory is going to be equal to 8% of our next quarter's beginning inventory, right? So for quarter one, our budgeted boat sales are 24,000. Our budgeted ending inventory is 3,300, and our budgeted our budgeted ending inventory is 3,300, and our budgeted beginning inventory is 1,920. So if they're both those are starred, let's go down. Per the production department's requirement, ending inventory for Q1 equals 41,250 times 8%. That's the next quarter's budgeted sales. So we need to have inventory on hand so that next quarter we can sell it right away. And that's 8% of the next quarter's sales. So that's how we get the 3,300. Per the production department's requirement, beginning inventory for Q1 equals 24,000 times 8%. Right? So if last year we knew that we needed 18% of this quarter's of this beginning quarter's inventory on hand, and we knew last year that it was 24,000. Well, we would have had on hand last to begin with 8% of our current year sales. So how do we get the current year information? Well, we know what this year's or this quarter's unit sales are, and we would have known that that production department needs 8% of those sales on hand, so they would have had that. That's how we get the 1,920. So then from there, it just flows. So we go. Quarter two, we got budgeted sales. That comes down from up above in the marketing department's sales budget. Then we got our budgeted ending inventory. Well, the budgeted ending inventory is 8% of the next quarter's sales, and our beginning inventory is what we had in ending inventory last quarter. So that's how that flows. Now, let's move on to number 3. HMS Round Belly's purchasing department has developed the following raw materials purchasing budget using the production department's budget. Production budget information. Production informs the purchasing department that they require 45 pounds of raw aluminum to produce one 14-foot boat. The purchasing department assumes that cost per pound of aluminum stays constant at 89 cents. Note that the production department requires to maintain ending raw materials equal to 20% of the next quarter's budgeted requirement. Assume budgeted production for Q1 following the budgeted year will also be 26. That was the same information from 2. Alright, so how do we prepare a raw materials purchasing budget? And that's the next step, because if you look over here under the master budget in our concepts and definitions, we got sales budget, then production budget. So we know how much we need to produce. Well, then the raw materials department is like, well, if you want to produce that much, we need this much raw material. So let's decide how much we're going to need to purchase. So it all starts with, so it goes from our budgeted boat sales to our budgeted production. From our budgeted production, we go down here to what we need to purchase. If we require 45 pounds of aluminum per boat, we need our budgeted production of 25,380 times 45, and for a total raw materials of 1,142,100 pounds of aluminum, right? Our total ending raw material is equal to 20% of the next quarter's production, and our beginning raw material is going to be 20% of our current quarter production, because as you recall from step number 2, if we knew what we were going to produce and we knew what we needed to have on hand, we require 20%. So if we know that we're going to produce 25,380, we know that 20% of that should have been on hand, because that's what we're required. So let's go down to the stars. Per the production department's requirement, ending inventory for Q1 equals 1,753,110 pounds of aluminum times 20%. So our ending inventory is going to be 350,622 pounds of aluminum. Per the production department's requirement, beginning inventory for Q1 is equal to 1,142,100,000, which is our current quarters needed for production, times 20%, which is 228,420, and that's there. And so then we take that total purchases of raw material times 89 cents per pound. That gets us the $1,125,229 of dollars that we need to spend on aluminum in Q1. Now, it all flows similar to above, and we come to the last, Q4. What's going to be our Q4 ending? Well, that's going to be whatever our beginning is, and our beginning for next year is going to be 26,000. So we take 26,000 times down here to the third star. Per the production department requirement, ending inventory for Q4 equals 26,000 times 45 pounds times 20%. That gets 234 pounds times, so that's how we get our Q4 ending. Then the rest just flows. Q1 beginning is Q1 ending, and then Q3 beginning is Q2 ending. Similar, Q2 ending is equal to Q3 beginning. It just flows. It all flows. There's arrows. Similar to number 2. Now, from number 3, let's go to number 4, which is our direct labor budget, right? Similar to how we have our master budget set up here over the concepts and definitions, let's go to the direct labor budget. HMS Round Valley Inc.'s production department has developed the following direct labor budget using the budgeted production. Note that each 14-foot aluminum boat requires 7.5 hours of direct labor. Management assumes that direct labor costs per hour will approximate $20 per hour for the budgeted year. Alright, so 7.5 hours per boat. Let's go. Similar to what we did at 3, we know what our budgeted production is, right? It's for Q1, it's 25,380. 25,380 times 7.5 hours. We know that in Q1 we're going to spend 190,350 hours of direct labor to produce the boats that we need to sell. And we know that the total direct labor cost is going to be that 190,350 times $20. And so in Q2, it's the same thing. We take our production times the hours times the rate, so on and so forth. So we come into an annual production hours and production units times that number of hours. We get our annual production hours times our rate is 15,271,500.